Hi guys, we're in our fifth lockdown here in Melbourne, so I really hope everyone is keeping well and safe at home. Well, at the same time, Vanguard Personal Investor has some pretty exciting news. First, they're going to change their fee structure effective on the 18th of August. And second, they've got a mobile app that is available to iOS devices. So in this video, I want to break it down the fee changes and to see if it's going to change our investing strategy to invest in Vanguard products. Hello everyday investors. If you're new to my channel, my name is Irene and I share my investment ideas and money smart tips on my channel. So welcome and let's jump right in. On the 9th of July, I received an email from Vanguard saying that they have a mobile app that is available. So I quickly went to the Apple Store and downloaded it. And at this stage, they only have the Apple system and the Android version will be released soon. Let's look at the app. The app looks pretty neat and easy to navigate. Same with the web login, it requires two-factor authentication from the SMS code. And once you log in, you can view your portfolio, any pending transactions, cash account and holdings, and you can do quick investing. The difference I noticed that is the transaction and the cash flows are mixed together under the cash account section, and you cannot click into the individual transaction to see their unit price and quantity that you bought or sold. I cannot find any of the distribution reinvestment plan record from the app, which normally appears in the transaction list if you log in through a web page. So I would say in general, this app is just a bonus tool for you on top of the web account for you to quickly review your portfolio and do quick investing. So you still need to refer back to the web account for detailed portfolio management. Now, let's talk about fees. So there are three types of products that you can invest in Vanguard Personal Investor platform. First is the Vanguard Managed Funds and the Vanguard ETFs and the top ASX shares by market cap. When I say managed funds, I mean it includes the actively managed fund and passively managed fund, aka the index funds. So currently that they charge a 0.2% account fee of any holdings that you may have plus any amount sitting in the cash account. And this account fee is calculated daily and deducted quarterly in arrears. And they only charge the ASX shares with the brokerage fee of $19.95 or the 0.15%, whichever is greater. And in the email, they didn't mention about the interest. They're actually paying interest for any balance that's sitting in your cash account based on the November 2020 announcement. Currently, that they are paying 0.35%, although that they can change anytime. And this interest is calculated daily and paid monthly in arrears. So in summary, based on the current fee structure, you are charged 0.2% of the account fee across the board, and you only pay the brokerage fee for the ASX shares, and for the interest on the cash account, you get 0.15% as the interest. And what are the new changes? The new changes for the account fee, they remove the account fee for the managed funds and ETF, and they halve the account fee for the ASX shares to 0.1%. And they charge ETF and the shares with $9 per trade flat rate. And they didn't mention about the interest of the amount sitting in the cash account, so I assume it will remain the same, which is 0.35% at the moment. And what will now change is the minimum investment amount, $500. Although Vanguard is claiming that this is not their pricing strategy, but it has to be a reason behind the fee changes, isn't it? So I want to break it down into different perspectives. Let's start with the external factor, that is Vanguard trying to gain more market share from other brokers. Let's start with its biggest competitor, BlackRock. BlackRock Australia does have a personal investor portal, but this portal is only for viewing purposes for its managed fund. So you still need to trade the BlackRock ETF through other brokers. And unlike the Vanguard personal investor platform, you can't simply create an account and register with them and start to trade. What you need to do, you need to send them the application form, and then they will send you back the login ID, and then you need to register with them. So to this perspective, Vanguard is already ahead of the game. Not only that, it has the personal investor portal that is so easy to be accessed by the public investors, but also they are having a mobile app. The head of personal investor of Vanguard said that the new fee structure is to help investors to make smart and long-term choices, and it's not designed to be a broking site. And he said, quote, "We appreciate that for some investors who regularly trade Vanguard ETFs, the introduction of brokerage means it may cost more for them to continue that trading behavior," quote. So the new fee structure definitely is going to be favorable for the investor who has larger balance but invests less frequently, but unfavorable to the ones who has relatively lower balance but would like to invest regularly. So I made two quick calculations based on two scenarios. So investor A, who has 50,000 with Vanguard, who invests 2,000 monthly to a Vanguard ETF. So he will save $12 to $40 per year, which accounts 0.06%. And investor B, who has 10,000 with Vanguard, who invests $500 monthly to a Vanguard ETF. So at the end of the year, he will lose $76 to $88 per year, which accounts 0.48% of his portfolio. And I have to point out that my scenarios is based on the investor only invests in one ETF per month. So if I invest in more than one ETF, then that will cost me more brokerage fee. So maybe this new fee structure will cause some disturbance among investors because different people have different investing behavior. So some will like it and some will not. Now, let's look at the brokerage fees from other online brokers. Currently, IG charge $5 or 0.05%, whichever is greater for 3 trades plus, and SelfWealth charges $9.50 per trade. CMC charges $9.90 or 0.08%, whichever is greater for 11 to 30 trades. And ComSec charges $19.95 for 1,000 to 10,000 trade. And NapTrade charges $14.95. And Vanguard would charge $9 per trade. So could it be Vanguard is using SelfWealth and CMC, which is around $9 per trade as the benchmark to set their new brokerage fee? And similarly, the ASX shares, it will be very similar brokerage fees compared to other online brokers. But on top of that, you are charged a 0.1% as the account fee if you invest in the Vanguard Personal Investor. But it definitely will be more convenient to have most of your investment in one place. So that is a attracting point. So all the above, my speculations is all around external to see if Vanguard is trying to gain more market share. But then within the platform, there are managed fund and ETFs. So based on the new fee structure, the managed fund, there's no account fee, there's no brokerage fee. So could it be Vanguard is trying to encourage people to swing to the managed fund other than the ETFs? I think that could be the case. There are 66 mutual funds that you can access within the portal, and there are only 5 ETFs that you cannot find a matching managed fund that tracks exactly the same index. In other words, there are 23 pairs of managed fund and ETFs that are tracking exactly the same underlying assets. So if you happen to invest in any of these 5 ETFs and you choose to continue to do so after 18th of August, you definitely gonna pay more because of the brokerage fee. I'm in the middle of comparing 3 pairs of managed fund and ETFs that tracks exactly the same indices and have exactly the same underlying assets. So I definitely going to share with you once it's finished. And by the way, if you are confused by any of the terms mentioned in this video, either is actively managed fund, what is a index mutual funds or an index ETF, well, I've got a video here that explains some basic concepts, so hopefully that can clear some of your confusions. If you've been using the Vanguard Personal Investor, what do you think of the fee changes? Would you change your investing strategy? Or if you haven't jumped on board, would the new fee structure make you want to use this platform? Please leave a comment below. Well, I hope you enjoy watching this video and everybody stay safe, and I'll see you in my next video. Bye.